All right, everybody. Welcome to another simulation session here today. Today, we're going to simulate, we're going to simulate something from this year, 2022, right? And so we're going to simulate around pre-London all the way till pre-New York. And we'll try to see if we can get some moves there on the 4 hour time frames. If we have an ability to manage risk, we're going to do that. But so we're going to be trading around pre-London to pre-New York. So let's select our dates here first. All right, so we're going to get around 10 dates. Dates we're going to start from, we'll do like, maybe from March till September of this year. All right, get dates. Okay, so we have these dates right here. April, May, actually, let's go back and get 20 dates, like a little bit more diversity. Sundays, get dates. Okay, more dates over here. We got May, we got June, we got July, August, September, March, April. So let's go with June. Oh, 12/6. What's that? 12/6, June. Yeah, I was about to say June. June. All right. 12/6. Let's go over here. Let's upload data. We're going to do gold. Let's go with gold. Update. Okay, update the calendar. Awesome. New simulation. Let's do this. Gold, and we're going to be doing 20. The thing about simulations is that you don't have to simulate too far back, because when you go too far back, the market dynamics are changing. So that's why it's very important to simulate, like something recent, and that kind of like helps you better. So what was that? 12 June, there we go. USD, we're going to start with, let's say 5,000. New York close. Leverage, we're going to use 1 to 100. Spread, we're going to use a fixed 15 pip spread. Previous days, we're going to see 300. Let's start the simulation over here. So we're going to start with the weekly. Weekly, we don't really need. So we're going to start with the daily. It's just good sometimes to take a look at the weekly, like a sneak peek at the weekly, but it doesn't really matter overall. 15-minute. Okay, yeah, we'll get the 15-minute. All right, let's open these charts here one by one. We go. We got the 15-minute, 30-minute, hour, 4 hour, and daily. There we go. Daily, 4 hour, 1 hour, 30-minute, 15-minute. Okay, perfect. So, now we gotta figure out what time this is. So we're gonna be starting trading at around 1 a.m. Eastern, and 1 a.m. Eastern is gonna be 2 hours before London Open, right? 2 hours before London Open. And as you can see right here, this is 0100 hours. 0100 hours mean this is 6 p.m. Eastern. So we're gonna go forward over here. 6, 7, oh, 7, 8, 9, 10, 11, 12, 1. Right now we are at 1 a.m. Eastern, exactly pre-London time, exactly 2 hours before London Open. So let's take a look at the daily time frame right here. So first of all, we're going to need our toolbars here as well. We're going to need the line studies, this, and yeah, I guess that's about it. So first things first, right? We have a resistance on the daily time frame, right? And we also have this support down at the daytime frame. Now, looking at the daily, it just clearly seems like that we're just consolidating right over here, right? In this 500 pip range. So let's take a look on the 4 hour time frame. Looking at the 4 hour, seems like we went up. I think it was Friday, right? Friday candle went up, and now we're kind of like retracing, right? So as we went up, so we got a breakdown price action here. So as we went up, there was a resistance to the left-hand side right here, 1855, which we broke, and now we're coming straight down over here. Now, by looking at this, if we look at it from a simplistic perspective, it just makes sense that maybe we're coming down to create some sort of a support. And if we can create some support, then there's a possibility the price can move up, right? That's the only thing that we can see at this point. So let's take a look on the 1 hour time frame. Looking at the 1 hour time frame now, we have some more information. We obviously have this resistance up over here, and let's do this. And now we have some support down over here. Now, looking at these candles, the way these candles are closing, they're basically closing like a small body candles, right? So whenever you have small body candles closing, this means that the volume is low. Plus, also, we might be consolidating. So this is why now we need to consult the 30-minute time frame. So looking at the 30-minute time frame, let's zoom in over here. We have very simple analysis, and the simple analysis is saying that we have a resistance on the top, and at the same time, we have a support at the bottom right over here, right? We have resistance and we have support. So now, our analysis is very simple. If we break above 1865, we have clean candles to the left-hand side, and with that, we can continue to push up, right? We all agree with that. We have great range, amazing range, and we can go up. And if price breaks below 1860, then there's a very good possibility we can continue to push down. This is the perfect setup that I like to see on any pair where we have clean range to the left hand side and clean range to the left hand side as we go down and as we go up and as we go down respectively. So all we got to do, like good people, is just to wait for price to break above. Now, one more important thing, right? Since price was coming down, right? Since price was coming down, so in this time frame, we had a downtrend. So whenever we have a downtrend right here, it just makes sense to wait for price to break support and continue pushing down. But if we do break above, the impulse entries as we break above this high, it wouldn't be a good idea because we want a candle to close above this resistance, right? Whenever we have this resistance, we have to wait for candle to close above this area. Sometimes you can have an impulse entry, but the best case scenario would be to actually wait for candle to close above this area. So we're not going to be making any haste decisions, and we're just going to wait for the candle to close, right? Because I think a lot of people try impulse entries and they maybe get burned with impulse entries. So we're going to just focus on waiting for candles to actually close. All right, so we are 2 hours away from London Open. Speed it up here a little bit. All right, we're coming up. Very nice, very nice. And see, as we come up towards these wicks, price can reject, right? So we don't know where it's going to reject. The 30-minute candle is about to close as well, which is good. Look at that. The way we're moving. If we close above this area, I think the next candle can continue to push further up here. And we got 5 minutes left, 5 simulation minutes. 4, 3, 2, and 1. Awesome. Candle has closed bullish. Beautiful. Right now, this is very, very simple, right? And now if we take a buy, our stop is going to be around 30 pips, 33 pips. I think it's important for the next candle now to break above this high. We'll take a buy. Stops are going to be below the previous candle, and we can continue to push up. So see this? 38 seconds in. If it starts to break the high in the first few minutes, I don't think. Oh, yeah. See, now this is good. Now, if we break the high, we can take an easy buy over there, have stops below this current candle, and then expect volume to continue driving price up, right? We're still in pre-London time right now. Yeah, this is perfect. But look at that. Oh, wow. Look at that retracement. That's a little bit of a pretty rough retracement over there. Maybe a fake out or something. Yeah, not going up anyway. So we just gotta wait, right? We have to wait we have to wait for candles to print something that we can identify as a, high probability setup. That's all we gotta wait for. Wait for candles to print something. So the 1 hour candle has closed. Let's take a look on the 1 hour time frame. Oh wow, look at that. Look at that. 1 hour candle has closed, strong bullish candle. What do you think here? What's the probability the price is going to go up versus going down? I think there's a very, very high probability the price is going to go up. The way the 1 hour candle is closing, strong bullish candle at high volume time, looking at the 30-minute time, looking at this 30-minute, the same setup is forming right here. We can see that, like a candle closed above this resistance, this candle closed with a small body. If this new candle breaks above this high, there's a very high probability we're going to continue to push up. And overall, that's going to be a push up on the 1 hour candle as well. Right? Right. Perfect. So that's what we're going to do right over here now. Now we're going to wait for candle to break the high. I think in the second, see, it's breaking in the first few seconds. So this is where I have some issues because once it starts breaking in the first few seconds, that's when there's a high probability for price to retrace down. So because if we look on the 1 hour time frame, the 1 hour candle has a wick to the bottom and a wick to the upside. And yeah, this is a big issue when it breaks the high in the first minute, 2 minutes. Yeah, see right there. Even if we take a small position, 12, 14 pips. Yeah, I guess we're going to miss it. Making a lower wick. That's good. Oh, breaking the low over here as well. Yeah, this is a big problem I have all the time. Whenever we start breaking the high in the first minute or first few seconds, first minute, there's a high probability it can create a lower wick. And we've covered that as well in our in the new videos that we're making for Smart Raja concepts. All right, so this candle is about to close over here. Looks like it didn't really do what we expected it to do. 30-minute candle has closed. Let's take a look on the 1 hour time frame. A 1 hour candle is also back down over here. Now let's focus on this 30-minute now. We have about 30 minutes left till London Open. Didn't really get an opportunity for a buy at this point. Some may be looking at this from a fake out perspective. So this is a 15-minute time frame. I don't know about the fake out because this was just very, very tough here. And if it's a fake out, we need this candle to close back in the range. But then again, this range becomes 20 pips. So yeah, I mean, yeah, it's tough now. So now the dynamics have changed a little bit, right? And this is something that we all have to understand. See, we had resistance here previously. Now we've created a new resistance, which is right up over here. See, now the range has become a little bit bigger. So that's a new resistance at this point. Yeah, this is interesting. So if we couldn't break up, is there a possibility we can break down if we couldn't break up? Right? Because price only goes one way or the other. The thing is, if we do break down, are we going to correct this move? That's the question. That is the question. We had no confirmation for buys because the candles broke the highs in the first few minutes. And yeah, couldn't really go up and came back in the range. So if we couldn't go up and come back in the range, will there be a high possibility for price to maybe break down, I guess? We have the candle about to close here now. In three, oh wow, look at that. We're breaking to the downside here. Very nice. Oh, look at that, man. Look at this 15-minute time frame. 15-minute candle has also closed below this area. You have the 30-minute candle has also closed below this area. And This is a very, very good close, right? If we look at the close we had earlier, it was a great close, but the next candle, if it would have broken the high, we would have taken the buy for price to go up, right? You have to understand this. Whenever we have one candle that closes above a range and that close is not big enough from the range, the next candle, once it breaks the low or breaks the high, it's a very high probability for it to continue pushing up or down, right? What happened in this case, we didn't break the high, let alone if that's in the first few seconds, first few minutes. That's what it is, right? Now, in this case right here, if we break the low, this is going to be a very good opportunity for price to go down. But if we don't break the low and if we close right over here, then the next candle would have to do the same. Looking at the 4 hour, we do see that the 4 hour is also breaking the low. So I think this is a very good opportunity for price to go down. So I think we're going to be executing on this trade right here. Look at that 1 hour time frame here as well. So we're going to slow it down so that we don't miss it right here. It's in the first few seconds, but it's the same thing I discussed. If we don't break above a lot, we break above a little bit, there's a high possibility we can continue to push down. So, and also we're trading the, I think this is the correction here. So we're going to go with the lot size here. What's this, $5,000 account? We're going to go with 0.5 lot, okay? Stops are going to be 1%, 1 point, yeah, almost like 1.2%. Trades, we're going to take this off. Yeah. Oh, oh, yeah. Should be good, should be good, should be good. All right, looks like we're making that top wick right here. And this top wick should now, is the video lagging for everybody? I don't think so. I don't know. And this top wick should be more than what we need to continue pushing price back down. Okay, so now this is what we wanted to see right here once this candle broke above this resistance, right? Awesome. So we're running at about, oh wow, look at that. We're running at about, 30 pips at this point. The speed of the stimulation is increased. Yeah. So this is, I think we can let it run till pre-New York with stops at, I guess, stops at break even once the 15-minute candle closes or the 30-minute candle closes, right? This is normally what I do with pre-New York sessions, or no, pre-London, London Open when I take those trades. So the candle's still moving, the 30-minute candle. As it starts to come to a close, we're going to move stops to break even and let the whole thing run. And we're coming to break even. And there we go. Stops are at break even. And that's it. So we're going to let it run till pre-New York. So let's forward the candle over here. We're going to forward the candle by 30 minutes. 1, 2, oh wow, look at that. 60 pips right here. Now, the confirmation where it's going to be closed, right? So now this is the 4-hour candle close. So we're going to look at the 15-minute candles here. Any sign of a bullish 15-minute candle after this run down, not about this, right? Because this is just retracement for the volume to continue to push down. Any sign of 15-minute candle, that's where we'll have to be like, securing at least something. And then letting the rest run. Right, so the 15-minute candle is about to close right here, and yeah, and then we can just trail our stops and let the rest of it probably run at that time. So 14-minute candle has closed right there. Look at that 15-minute candle. We closed bullish, so that if the 15-minute candle closed bullish, there's a high probability we can close bullish on the 30-minute. And the reason why, because we've moved away from a zone. The further we move away from a zone, the higher the probability is for price to retrace, right? So if it's going to retrace, let it retrace. We're going to close about what? We're going to close 90% close. Bring our stops towards the high of the 30-minute. the previous one and let the let let the rest run. So we're gonna let it run till pre-New York. Oh, got stopped out. Okay. So now we are in New York Open at this point. Can we are still consolidating. Can we break below this? Oh, wow, look at that. I guess this was news. Continued pushing down. Awesome. So one trade we took pre-London, price continued to push down. We had confirmation of price going up, but we didn't break above the high, so we didn't take that trade, right? Same confirmation happened when price broke down. Price broke in the first few seconds, took that trade, and price continued to move down. Stops were kept within the range, but not that deep within the range. I guess we're looking at maybe not risking more than 2%. So I think the risk was like around 1.5, 1.6%, around $70, $80, right? Let's move on towards the next session here. What's that? Wow, what's happening here? Oh, what the hell? This thing is still dropping over here in gold. How big was this drop? This was a 300 pip drop. Crazy. I don't remember this at all. I don't know, maybe, but yeah, let's move on. Oh my God, look at that. Still dropping. Wow. So this is 8, 9, 10. So this is 1 a.m. Eastern once again. We are at 1 a.m. Eastern. Looking at the daily, we just basically broke below the support on the daily. So let's take a look on the 4-hour time frame. Looking at the 4-hour time frame, obviously we are trending bearish, right? Obviously, we have, let's zoom out here a little bit on the 4-hour. We have this resistance formed on the 4-hour, no, the support, which seems like the 4-hour candles are maybe testing this area. And if the next 4-hour candle breaks below this low, I think there's a very good probability that we can continue to push further down, I guess. I mean, that's what it looks like at this point. Let's take a look on the 1-hour time frame. Looking at the 1-hour time frame, it's also giving us those same signs of pushing down, but we'll have to consult our surgeon, which is the 30-minute time frame. This is the 1-hour resistance we have. This is the 1-hour support we have. And if the next candle can break the low, I guess we can continue pushing down in this 50 pip range. If we can break above, there's some problem here to the left hand side. So we'll see what that problem is like on the 30-minute, because even if we break above 1828, you got a possible wick fill 54 pips away. So let's take a look at our trusty 30-minute time frame. Now, looking at the 30-minute time frame, there is some more information right here. Now we got to put the pieces of the puzzle together, right? Now, looking at this 30-minute time frame, the only interesting thing that we see at this point is that maybe we're creating some sort of a resistance right here. If we are creating a resistance right here, then the next candle has to break the low to continue pushing down, right? But we have to look to the left hand side as well, because if the next candle breaks the low to the left hand side, right? If the next candle breaks this low, we have a support right here in the 30-minute time frame. So I don't think that's enough range for price to move down. Let me bring this right here, right? So I don't think that's enough range for price to move down. I think what's going to be better is going to be waiting to see if we can break below this low and then continue pushing down to a support down over here. I think that's going to be enough range, because that's going to be around, yeah, like a 26-30 pip range over here, no problem. But in the other hand, if we can break above, let's say, like a 30-minute resistance is right here, 1826. The next resistance is what, 10 pips away? So maybe this is a better resistance, 10 pips away. If we can break above this resistance, how far is the range? The next is like, 33 pips away, and with volume, we may continue up towards 53 pips away. So that looks way better, right? So now you got to identify, do sells look better or do buys look better? The buys, I think above 1827 look better. Sells below, um, sells below 1823 look better, right? So now we just got to wait over here now again. The waiting, the waiting continues. The waiting for price to do something continues. So we shall wait. Yeah, so ideally we're just in this 34 pip range. Nothing to do in this range. So we need a hero to break out of the light. And then we can continue up with pre-London with might. All right, the 30-minute candle is about to close. 30 seconds. Oh, there we go. We got closed. We closed back in the range, but look at the body of the candle, right? Look at the body of the candle. We had, a bullish candle right here with no wick at the bottom. Next candle just decimated that low. Big body candle. Next body, bearish candle, weak body candle. What does this mean? I think in this range, the bearish volume is a little bit depreciating. And I don't know what's going on with this candle, but it's kind of like jumping up and down. Oh, look at that. We're breaking the high over here now. Will we go bullish or is just breaking the high to go down? Oh, oh, interesting. Interesting things happening here now. Do we have any news? Let's take a look at it if we have any news. We have no news, no news. Oh, we got PPI later on, but that's in the New York session. We don't trade New York session. We only trade pre-London. Interesting. Interesting facts we have here. We have the candle closing here now. Looks like if we do break above that area, I think we can have the same situation that we had earlier on. Yeah, I think we can have the same situation we had earlier on. Oh, look at that. We have 5 minutes left for the candle to close. 5 minutes left. And wow, look at that rally. This candle is rallying up over here now. We have 2 minutes, 2 simulation minutes, 1 simulation minute, and closed. Wow, look at that. So we closed above resistance. You guys remember when we were taking the previous trade? Where was it? Right here. This candle closed above resistance. If the next candle would have broken the high, would have taken a buy for price to go up, right? As simple as that. But it didn't happen. In this case as well, we've broken the high, and I think if this candle breaks the high over here, I think there's a very good possibility with volume from London session, we can continue pushing up. Again, volume from London session. I'm not talking about this resistance. I'm talking about all this area right here because there's volume in the market we're expecting. So sometimes guys are going to say, "Oh, aren't you afraid of the zone right there?" No, because there's volume in the market. Uh, you have to identify that there's volume in the market, and volume can piggyback price all the way up towards, like maybe this next resistance right here. And we've covered this section in our new Smart Raja concepts that's going to be released in December. That how big of a candle you need out of a zone to take an impulse entry, and how big of a candle do you need out of the zone to wait for a retest. We've covered that. So that's going to be for you guys in December. All right, let's see how we do at this point. Oh, look at that. We're making a lower wick here first, which is absolutely phenomenal, which we like making a lower wick before we break the high anyway. See right there. Well, we've broken the high right there. So I'm going to take a buy over here, right? So we've broken the high. This is a great opportunity to take a buy right here. Where again, we're going to risk around, 1.5% right here and anticipate price to continue pushing up just the way we did in uh, the previous trade. All right. Yeah, sometimes. Oh, there we go. Yeah, perfect. That's what we wanted. That is what we wanted for price to do, to continue pushing up. And as the 30-minute candle comes to a close, yeah. Normally London session is like this. I like to take a trade in a London session and then I like to just look away and wait for the 30-minute candle to close. That's all what I do in a London session. Every London session, I just look away and I wait for the 30-minute candle to close. Once the 30-minute candle closes, then I see what's going to happen. I think there's only 2 times I've taken a loss in a London session. Just 2 times. All right. Yeah, looks like Wow, there's a lot of not good things happening over here in this 30-minute candle, to be honest, but we're still closing bullish here now. So if this candle breaks its own high, oh wow, look at that. Yeah, I guess this is where I need to maybe move the stops up a little bit because was this a retest? 15 minute, maybe. But we have volume here now. The London session volume should come up here now. It should continue till pre-New York at least, you know. At least. Yeah, to be honest, I'm not a fan of this here. So probably gonna close this. I don't like the way it's really moving. Put stops at break even here. Yeah, I don't like the way it's kind of like moving within these areas because we have a big rejection. We have a rejection here. Of course, we were anticipating volume. This is London Open now. London Open. Oh wow, look at that. Yeah, we are actually continuing to push up. London Open. Now we're in this rejection area to the left hand side. Yeah, interesting. Very interesting. So yesterday London Open was great. Prices moved down and just continued to push. This one didn't really move up. Maybe we had some problems here to the left hand side, but the main idea was to wait for the 30-minute candles to close. That's always the main idea, the main goal. Yeah, I mean, there's a lot of no, I don't like this. Moving into pre-New York, nothing. We moved down. Okay, awesome. So this case area, same idea we did. Waited for the candle to break above the high. We broke above the high, put stops below the previous candle, waited for the 30-minute candle to close, and with volume we kind of like made bullish candles, but essentially there was a lot of a rejection to the left hand side. So oh, look at that. Overall 4 hour did continue to push down. Okay, but the next one formed and then the next one broke below the low. That's okay. Let's go towards the next one here now. Oh wow, look at that. We continued pushing down over here. So I guess we were right about that retest on the 4 hour. Nice. 8, 9, 10. So there we go. 8, this is pre-London time. 4 hour is creating a support. And looks like we may be continuing to go up or we may be continuing to go down. Let's take a look on the 1 hour time frame. Looking at the 1 hour, looks like we are creating a resistance. If we are creating a resistance on the 1 hour, I think we can continue pushing down. Also, we have the support to the downside here on the 1 hour time frame. Let's take a look on the 30 minute. 30 minute moved quite a bit down over here. Let's take a look on the 30 minute here now. On the 30 minute, we are creating a resistance. And with this resistance, we're also creating some sort of a, I think the next support is right here. This is where we're creating a support. And I think if the support is actually a valid support, the next candle, I mean, really, the next candle maybe has to break this low or not, but like this candle also has a bigger wick, right? And when a candle's wick is bigger than the body, this means it's an exhaustion candle, right? Or maybe it may have been rejecting this area here as well to the left hand side. Maybe. But let's take a look at from a buying perspective and selling perspective at the same time. Now, I think we'll need to see a candle to close below this area because if we can close below this potential area, then we could continue to push down in this 40 pip range. But if we can close above 1817 right here, then I think there's a very good possibility we can move this up, move this box up here as well, maybe right over here. So yeah, a lot of problems here to the left hand side. But I think these problems, yeah, a lot of problems here to the left hand side. But maybe the overall 4 hour can go up. I don't know. Maybe like we're going to expect volume to do all the heavy lifting, like we've let volume do the lifting in the past. So I guess yeah. So we're just going to wait. All right, 30-minute candle. Oh, look at that. We're breaking below the low over here. Yeah, for sells to happen, we need this candle to close below this area. Even though we're breaking below this wick, it's yeah, I just gotta wait for this candle to break below this area because at one point this candle was also bearish, was breaking below this wick, but it closed back in the range. So we don't know what this candle is going to do unless it closes, right? At least a 15-minute candle has closed over here. Let's take a look at this. A little bit of a complicated view and analysis of the 15-minute, but we'll take a look into that here as well. Um, Basically, this is the area that we're looking at. So even though if we want the 30-minute candle to move below towards 1809, we want the 15-minute candle here to break this low to continue pushing down. But are we going to break that low on the 15-minute for the 30-minute to continue down? If we break the high, then I don't think it's going to break the low. Oh, yeah, we've broken the high, so I don't think it's going to break the low. Let's go back to the 30-minute now. Yeah, basically we're in consolidation now. Price is just in this consolidation area, so we just gotta wait now. Just gotta wait for a sign for price to do something so we can take a trade. The 30-minute candle has closed. The new 30-minute candle has started. It's look at that. We're about to break above this area. So it's funny because yesterday's trade was buys as well. If we break above this area, I think we could probably look for another buy over here. The thing is, so let me explain this here, right? You see this wick right here to the left-hand side? This is the rejection area. So what this means is that whenever a candle came into this area, into all this price action area, candle rejected and closed back in the range. If this candle breaks above this area and closes above this area, this price 1817, if we close above 1817, then there's a very high possibility that we can continue to push up. That's basically what we're looking at this point. Because all the candles can close below that area, but if one candle closed in this area, then that's basically breaking the doors for the next candles to continue bullish, or however we may want to see it. All right, awesome. Look at that. 30-minute candle has closed above. This is the same thing. This is exactly the same trade we took earlier on. So, the next this candle right here, it makes a lower wick, and once it breaks the high, the stops are going to be below the lower wick, and then we can anticipate volume in pre-London to continue pushing price up to fill these wicks here to the left-hand side. Right? There's a very, very high possibility. All right, look at that. We made a lower wick, and we've broken the high right here. Easy. Stops below this current candle. Oh wow, yes. It's exactly 2% risk. Exactly 2% risk right here. I don't like this. I don't like this risk, so probably gonna lower it down a little bit, probably close 25%. Yeah, it's a lot of risk. 2%, too much. Can't have 2%. Oh, let's lower the stop here as well because it's right at that wick because the spread can take us out. So yeah, let's lower that a little bit. All right, the stage has been set. We're expecting volume to drive price up like we did in the previous trade. Candle closed above this rejection area. So we have pre-London, and pre-London has volume, and basically volume should drive price up. But if you do get stopped out, we're losing about like what? Maybe 1%. That's fine because we're already 5% in profits. So I think that's totally okay. Oh, look at that. We're pushing up now. And as this candle comes to a close, I think then we're going to be able to make some sort of a decision right here. We're closing towards, yeah, this is a difficult London session over here because normally we've just had like clean moves go up. Yeah, I'm not a fan of this. I mean, if this candle breaks the high, just gonna move stops to break even and just that's it. Not a fan of this at all. Yeah, move stops to break even. That's it. Oh wow, look at that. We are pushing up. We're coming up towards some sort of we're coming into this wicks, and the way price is moving right here, I don't necessarily like it because at any moment we can reject this area. So for that purpose, I'm just gonna close the whole thing and okay. Yeah, it looks like we can come up towards 1824 with this volume. But also we've left this zone here a lot as well. And as you mentioned, the more we move away from a zone, the higher the probability is for price to do a retest of this zone. Let's see how the next candle goes. Oh, next candle closed. This candle closed like this. Next candle. Oh, wow, look at that. Next candle went all the way up over here. Interesting. Very, very interesting. Yeah, this is tough. I mean, even if we go up, let's see if we have any news over here. We have core retail sales for USD and FOMC. We're right at the point where they increased the rates. You guys want to trade the rates on? Oh, this is gold. Oh, okay. We can do some rate. We can do some rates trade over here. Yeah. Mm. All right. Perfect. Let's do some. Let's do some fun rates trade. When waiting for 30-minute candle to close, the whole move gets completed. What should I do in that situation? Nothing. You can't do anything. If a whole move gets completed, that's totally fine. Then you look at the candle and then you ask yourself, where could you have entered the trade? This you have to do for the next 4 months. That's it. There's no other way around it. That's how I good at. That's how I got good at impulse entries because I would see price just move and I was like, oh man, I missed the trade. But I look at that for like 3, 4 months and then I start to understand, oh, maybe I could have had an entry here, entry there, and then the whole impulse entries concept basically came into my mind. I'm like, okay, you know what? Maybe this makes sense. At 6, 7, 8, 9, 10, 11, 12. All right. We are coming slowly towards interest rates. Interest rates are here. What's going to happen? What's going to happen? That is the question now. That is the question now. If I remember this correctly, I think I do remember this correctly. This is when I was in a drawdown. With increase the rates, gold dumps down, and then when inflation, gold starts to go up. I think I remember this. Yeah, we're not gonna trade this. We're just gonna watch this. Because if I do clearly remember, I think we live streamed this as well, and I think I was in a 60,000 drawdown, and I kept taking buys and ended the day in 58,000 profits, something like that. Yeah, see, we dropped down because they increased the rates, good for the dollar, and later on with the press conference right here, later on with the press conference, they talk about, yeah, there's inflation, blah blah blah, and then inflation makes the dollar look weaker, and then gold starts to go up. I think that's what happened here. Exactly, that's what happened here. So we're gonna see this right here. See the 30-minute oh yes, I do remember this exactly. This was the candle right here, and I took a buy right here, and then price kept going down, and I kept taking buys. I kept taking buys till around 1818. And then guys were saying in the YouTube chat, oh bro, look, the candle closed below this resistance and blah blah blah, it's gonna go down, you're gonna lose money. But then we're like, no, there's inflation. And if there's inflation, that's what they talked about in press conference, price should continue pushing up. And that's exactly what happened right here. Yeah, it did continue to push up. Damn. Yeah, I closed around 1831, 1832. And then, wow, it would have been a. Would have been $100,000 day, but was okay with 58,000 after like in a $60,000 drawdown. Anyway, let's move over to the next one here. 8, awesome. Obviously, we're consolidating here now. Let's remove all these analyses. Oh, I would hope my cursor movements would get pretty good by playing all that Call of Duty. Played Call of Duty the whole day yesterday. Didn't do any work. My family was angry at me that I didn't give them time. Man, playing Call of Duty. Okay, there we go. We're consolidating right here on the 30-minute time frame. We got resistance. We got support. This is a 50 pip range. In PS5, no, I'm in a PC. Um, and 1 hour time frame is also consolidating. 4 hour time frame is whatever. But basically, we're just consolidating it. The 4 hour and daily don't matter because on the time frame that we want to trade, we're basically consolidating, and that's basically all that matters here, that we're consolidating. So yeah, we're just gonna wait over here. Yeah, Call of Duty it's pretty good. The graphics are really, really, really good. All right. See, after this huge move, I think it would make sense for gold to just consolidate here a little bit. We're up about 8% here now, so that's pretty good. Do you recommend to look for buy sell after 30 minutes? No, I don't recommend to look for buys and sells after FOMC at all. What I do recommend is to sit and watch at least 4 or 5 FOMCs, and then you need to do that yourself. I'm not gonna, yeah, I'm gonna make no recommendations on trading news. That's all on you. You have to see how you seem fit because I've seen FOMC for the last, what, 6 years? So there's a little bit of an experience there. So you have to watch news play out before you're going to do anything. All right. So we're just consolidating here. I mean, nothing's really happening, nothing really breaking at this point. Would really hope price to break one way or another. But yeah. Oh, wow. Look at that. We're actually breaking the lows here now, which is good. It's perfect. Candle is about to close. Closing in 3, 2, and 1. 15-minute candle. Let's take a look at this 15-minute candle. 15 minutes doing some sort of a retest maybe. So if the next 15-minute candle breaks the low, stops are going to be 23 pips. I mean, maybe some sort of are we going to break the low, or oh yeah, we are breaking the low. 30-minute as well. Could this be like a rushed trade? 26 pip stop, 15-minute as well, 25 pip stop loss. Yeah, I don't know. No wick on the top is good because I mean, yeah, so you got to go to the market fluidity section about candles. No wick on the top is good, so you got to go through that section to see why it's good. But yeah, maybe go with a lower risk over here. Lower down the risk over here. Still risking about 1%. Maybe lower this a little bit more, close like maybe 20% more. Yeah, that's good. All right. 15-minute candle closed. We're pushing down, which is good. Very good. The candle's about to close over here as well. And let's see over here. The candle is about to close. There we go. Candle has closed. Now, the only problem with this candle versus all the other 30-minute candles is that now, if you look at this previous one, look at this candle, this closed with a nice healthy candle, right? The only problem with this candle is that the wick is bigger than the body, which means this is an exhaustion candle, which means there's no reason to stay in this trade. It's an exhaustion candle because the wick is bigger than the body. Whenever you have a candle whose wick is bigger than the body, it's an exhaustion candle. We have a whole webinar on that on my YouTube. The difference between wick fills and an exhaustion candle. Yeah, this didn't really do what we expected it to do. So now we're coming back in the range. If we come back in the range, this may become a fake out. How big is this range? This is like a 44 pip range. Yeah, maybe take a trade on the, I don't know. Let's see over here. But if we stay below here, all right, the candle has closed bullish. This next candle, if we close bearish, and then right at London Open, we can continue to push down. But if it makes a lower wick and it breaks its own high, then I think there's a very good possibility we can continue pushing up in this range, since then this move down becomes a fake out. Yeah, see right there, we're making a lower wick. Awesome. I mean, if we just close bearish, I think it's going to be good. But right here, see that? We're breaking above. Oh, London opened an hour ago? Oh, yes. Sorry. My bad. Lost track of time. This is still going to be a 27 pip range. See, yeah, I'm not going to execute on this, but we're just going to, like, watch it play out. We're still about 7.5% up. So, if a buy was taken right here, 25, 26 pip stop, we're looking at around, for price to come up all the way to the end of the range right here with volume. And this is something that we've discussed in the fake out section. We've also created a video for smart ledger concepts as well for the fake outs. So see this close back in there. Oh, damn, look at that retracement. Too much. Too much of a retracement happening over here. Way too much. Not a fan of this. Yeah. Oh, wow. Oh, damn, we broke later on in New York session. Okay, that's fine. So basically, we're correcting this move here. I do remember this, but I don't remember executing on this. I don't think so. Or I did. I don't know. Don't think so. Inflation good for the dollar or bad? Inflation is good for the dollar. No, inflation is not good, because inflation means the prices of goods and services go up. Whenever prices of goods and services go up, it's not good. It's good in a way when people are earning more money, right? When people earn more money from their jobs, businesses, real estate, stuff like that, then they gotta, like, increase the interest rates so that the prices can get a little bit, higher at that point. But in our case right here, this is inflation because a lot of free money was pumped into the market. Like, people got a lot of free money during COVID, and now Canada is also giving away free money now. So there's a lot of free money printed all around the world as well. So that caused negative inflation. So that is not good at all. It's very, very bad. But anyway, next is going to be the Friday one. We don't normally trade the Friday one. The recording of the stream is going to be up in maybe like 3 or 4 hours. I'm going to announce that in Slack as well. And thank you everyone for showing up. It's late at night for some people. Some people are very early. Some people in midday. Midday guys are very lucky. I had to wake up early, no problem. Had coffee, so that's good. So take care, everyone. We're going to see you on Monday. Oh, 5:30 a.m. Wow, nice. Cool. Bye bye.